I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's been some wild swings in the financial markets since we last spoke, and interesting times to say the least.
Well, I get all the tweets that President Trump puts out, and he says, it is not a trade war. We already lost it. Then why is he putting all these tariffs on Chinese goods? Now they're saying they should put tariffs on Chinese robotics and machinery. If this isn't a war, what is it?
Well, it's kind of funny because one of the tweets today says something about we have a $500 billion deficit. How can we lose or something, or what is there to lose? And it depends on who you are. I mean, I think there's two things going on. I think, first of all, Trump believes in tariffs. This is something he's spoken about since the 1980s. And there is an element that was bigger back then in the Republican Party that was for tariffs, such as people that supported Pat Buchanan and Ross Perot when he ran for president. That was a big part of his plank. But this is talking decades ago, and now Trump is kind of like seems to be the only one out there really for tariffs, and of course he is the president of the United States, so he's able to do something about his desires. But I do think he also has campaign donors who want this too and are going to benefit from it. For instance, we spoke once about the steel tariffs, and Wilbur Ross is his commerce secretary, and Wilbur Ross owns a lot of steel companies in his conglomeration of companies, and he was also one of the biggest behind-the-scenes supporters and donors of Donald Trump. So I think that's could be, an explanation, and he's got people in his administration now. This Peter Navarro has risen up, he was sort of like a nobody at the beginning, and now he's kind of talking with Trump on a daily basis, and other people have been pushed out. What I think is kind of interesting about what's Donald Trump in the stock market is a year ago he was tweeting about the market whenever it would go up, and cheerleading it and saying it was evidence of support for his policies. In fact, he's cheerleading it so much that when he went to Saudi Arabia, he gave a speech there in front of the Saudi king. I actually watched it live while he was doing it, and the first thing he mentioned was the trillions of wealth that he was generating, and he was referring to the financial markets. Now, since the market peaked out in January, he's only tweeted about it, I think, twice. And one of the interesting things, though, about it is last year I had this notion that if the stock market ever topped out and started to decline, that we might actually see Trump appear to the financial media and to the public as being a little bit erratic, in the sense that he might start making belligerent type statements instead of cheerleading the stock market, focusing on business enemies, perhaps enemies inside the government. I thought he could start attacking the Federal Reserve, but he's not doing that. Instead, he's singling out Amazon in particular, since the market peak, as a new enemy to mobilize people around, instead of just the stock market going up. You can't really talk about that. So I think we're seeing a new sort of, I think this year, a meaner type of Trump. I mean, he's always been a big talker, but now he's going to start to single things out is sort of playing a new type of role, which I think is going to bring more instability to the stock market. It proves to me that he never actually cared about the stock market. He talked about it last year as some sort of proof of his support, much like he did during the election when it came to polls. But in the end, he doesn't really personally, I think, actually care about it that much.
Now, of course, if there is a crash in the market, would Trump be blamed for it?
Well, I think some people will blame him for it. I certainly think the financial media will blame him for it. For instance, whenever the market has a down day, it's very easy to find a Trump tweet or a Trump tariff statement or something and link it to that down day. I mean, almost every single day he's saying something erratic. And look, and we have other events coming down the road too. In May, there's a good chance he's going to rip up the Iran nuclear agreement, which is going to cause problems with European allies. They're not going to like that move. Who knows what's going to happen? We have the North Korea situation that could flare up. What if Trump backs out? He's appointed to his national security advisor position, probably one of the most belligerent people to ever hold that position, someone who in fact has lied to get us in the war in Iraq. He was one of the top liars on that war. It's kind of bizarre because this guy supported the Iraq war and Trump says that was a mistake, but regardless, he's very belligerent. He's actually got a doctrine, I believe, that asserts that lying is okay if it is to the benefit, in his mind, to the type of policies he thinks are correct. Anyway, the point of this is that there's just going to be, I think, more chaos coming. And yeah, I think a lot of people will blame declining stock markets if they happen, and I think they will over time, on Donald Trump. However, I still think a lot of people, probably a quarter of the country, are going to support Trump no matter what. And if the stock market declines, they will think, well, yeah, it's the fault of Trump, it's the fault of China or the fault of Amazon or Facebook or whoever Trump singles out. They will blame them or focus on them as the causes of the losses they might experience in the market. I do find it interesting that it doesn't seem like he's going to blame the Federal Reserve. In my mind, honestly, I think Trump has inherited a stock market bubble, or it was already a bubble when he got into office, and we were going to have a bear market one day in the future. I mean, it's just a matter of time, and, 4-year term is probably going to happen at some point. So I don't necessarily blame him for everything. However, I do think he's going to contribute to a sense of unease. For instance, in the year 2000, there was a stock market top that year, and the market, the internet bubble bust, but the market slid in that fall. Immediately after the election, it seemed like it was falling every day for a couple of weeks when the recount situation was happening between Bush and Al Gore. So you can have a period of political uncertainty that contributes to declining stock markets and a loss of confidence. My answer to that is, I've said this before, and I'm just going to repeat it again. I really think gold is a necessary thing for people to own. The gold is trading opposite the U.S. dollar, which has been declining really since the beginning of 2017. Gold has a negative correlation to the U.S. dollar, and for whatever the reason, over the past year, the Chinese yuan has been going up as sort of the safe haven. Last August, when there was this tough talk between Trump and North Korea about nuclear strikes or counter strikes and whatnot, it was the yuan that was going up. The U.S. dollar wasn't. Since the January peak, the same thing has been going on. The U.S. dollar has not acted stronger. In the 2008 bear market, it was the opposite. The U.S. dollar went up. This time, the U.S. dollar is down year to date, and I think that's one reason people should own gold. Second reason is, interestingly enough, gold is also trading opposite the U.S. stock market, and it's been doing this since the January peak in the Dow. So it's acting as a safe haven against stocks. And I've got 20% of my money basically in physical gold and physical silver. That might be too much for most people to own, but most Americans have a portion of their money in bonds and consider that as a safe haven, when bonds aren't acting right. They're declining this year, and not playing their traditional safe haven role. And I think that's a real dangerous situation. And I really seriously think most Americans need to take some of the money that they have allocated to bonds, in particular treasury bonds, and put that into gold. If you have an investment advisor, they typically will tell you to have 30% to 50% of your money in treasury bonds. I firmly believe that much of that allocation now needs to be with gold. Personally, I see very little reason to own treasury bonds as a long-term investment at this point in time. But I think that's the big solution that people have to have. As far as the stock market goes, we're seeing a wild increase in stock market volatility following last year's record low in volatility. The stock market didn't pull back one time 5% from a 52-week high. The Dow only went up or down more than 1% 3 days last year, and now it seems to be doing that every single day just about. So this is a completely different type of market environment than we were in last year, and it's very difficult to just throw your money at any individual stock and just have it go up week after week after week like it did last year. Now things go up and down rapidly, and my contention is that's a topping process that we're seeing play out. But even if you're a listener and you don't believe it, it's no denying that this is a much more volatile market. There's stocks that were once very popular that are broken down, not good to own anymore, such as Tesla, which I've got to say I'm short just for disclosure purposes. But Facebook is another one that has broken down this year, which at one time was an invincible stock. So if you're bullish, you at least got to say you got to be a little bit picky on what you buy and what you continue to hold.
We'll have more with Mike Swanson right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Mike Swanson. Mike, do you feel the debate or the controversy surrounding Facebook now was something that was just bound to happen? And who is surprised that they were selling your personal information and that of your friends?
Yeah, one interesting thing about Facebook is that the stock actually started to lag the NASDAQ right at the beginning of the year. And I think, to me, I've follow the news of the company pretty closely. And one of the things that happened, I follow it closely because I got a Facebook fan page for my business and, some local businesses I'm involved in. And I noticed, starting right around New Year's that the free traffic that I was getting off Facebook to my financial website and other website properties just dove. It collapsed. And Facebook announced that they're changing the news feed to make it so you wouldn't see as many news articles from businesses or news websites in general. And they claim that this would lower the amount of times people are clicking ads, even the amount of time people were spending on Facebook. There's an article I saw that actually predicted Facebook claimed it would drop the amount of time people spent on it by about 5%. But I saw another article that was studying website traffic, a serious online publication, online marketing publication, and they are predicting a 20% decline in the amount of time people spend on Facebook would be. So these things were happening right at the beginning of the year. It was causing the Facebook shares to start to lag, and it made me wonder if Facebook wasn't going to have bad earnings eventually or something, or at least we were probably seeing a peak in people's engagement, the amount of time they're spending online with the company. And then, of course, a few weeks after that, the scandal of this Cambridge Analytica company broke out, and it was revealed, as you mentioned, that people were getting your online millions, tens of millions of people's online data and studying it to better target them in political advertisements. So Facebook's really in a kind of a limbo land, I think, much like Microsoft was over 20 years ago when they were facing an antitrust case and government action against them. Now, Facebook's not facing that yet, but they are facing the possibility of either stricter regulation or they're going to have to make drastic changes in the way they allow people to advertise. And I just give a quick example of this. If you advertise political ads on television or in the newspaper or in a magazine or Google, for that matter, inside the United States, you have to disclose that it's a paid advertisement on behalf of the politician or this political action committee and whatnot. With Google, you have to do this. With Google, if you send advertising to a website, which I do, you have to have on that website contact information, a mailing address, evidence that you're a real business with real existence, physical existence. On Facebook, you don't have to do none of that, and that gap is what many people took advantage of. The so-called Russians, bots and companies or whatever were doing this supposedly last year, but so were unsavory advertisers across the board that I think Facebook allows people that can't advertise elsewhere to advertise with them in order to make more money. So the bottom line is, in my view, they're going to either have to accept some sort of government regulation to stop them from doing these things or clean up their act themselves. Their changes of their news feed that they started at the beginning of the year was an attempt to hold this off, I believe, but I think they're going to have to do a lot more. And whatever they do, it's probably not going to make many people turn away from Facebook as far as users, more than they have already, but it's going to infect their bottom line when it comes to earnings. So I think as an earnings growth story, it's now put in doubt. And when you have a stock that's gone up for years and has such a high valuation, when the earnings growth story falters, then the stock breaks down and can fall dramatically. And I think the drop in Facebook has only begun. And that's really also, I mentioned I'm short Tesla, but that's also what's going on with Tesla. The story of Tesla has been put in dramatic doubt over the past couple of weeks. People have doubted it for a couple of years, but now it's becoming on the front page of the Wall Street Journal this week, and over and over again. And another company I'll mention that people aren't doubting now, but I think unfortunately will one day, and I say unfortunately because I use it as a customer, that's Netflix, because Netflix doesn't turn a profit, and they fund itself through junk bond debt just like Tesla does. Tesla doesn't turn a profit, but Netflix probably has a more viable business in a certain sense, but it doesn't have positive cash flow. And one day, it's doing this because it's able to just continue to issue junk bonds. But I think one day that's going to end, in the future, maybe a year or two from now, and that's going to change the Netflix growth story, and hurt it. The funny thing about Netflix though is it remains the number one performing stock in the NASDAQ 100, so far year to date. So this hasn't impacted the stock yet. I'm just saying this is a future thing that, it was the news of the past couple weeks that finally kind of put the nail in the lid of Tesla momentum and Facebook momentum, and something similar will probably happen to Netflix one day, probably not next week or next month, but maybe next fall or next year. So this is what happens, though, with the fad growth stocks. It's what happened in the internet bubble. There are many stocks that just seem to go up forever, and then when it became apparent that reality was not going to be able to match the hype, that the stocks faltered and went into bear markets. And what's interesting about, one of the interesting things about the stock market, and I do think we're getting a bounce today, you know, it could last a couple days or a week or two, but regardless, one of the really interesting things about the past 60 days is we have seen many stocks just break down and fall and break the momentum. I mean, I just mentioned 3 tech stocks, but Walmart did it. There's multiple, McDonald's did it. There's a bunch of Dow stocks that have done it, about a third of them. And I haven't seen this many stocks break down, since, October 2015. And that was when the stock market was in a correction from July to January that took the NASDAQ down 20%. So I think we're in a correction still. I don't think it's over. We're probably bouncing, you know, off the 200-day moving average, but the last correction took the NASDAQ down 20%. This one will probably do something similar. And if, my suspicions are right, it could turn into a real bear market. You know, if we get a decline 20% or whatnot and bounce in the summer, then roll over again, then we're really in a like a fall of 2000 situation, or you know, a situation like the summer 2008. So and it's just because the stock market is, you know, you got bear cycles, like they happen. And again, I'll repeat what I said earlier because I think it's so important. I really think gold is the simplest answer. I mean, I'm betting against some individual stocks with short selling. I got long positions too, but for the average person, just, you know, putting some gold and silver in an account is, you know, it doesn't sound exciting because gold is still in a trading range of 1350 as resistance until it breaks through 1350 and 1360 and goes to 1400. No one really cares about it. People like to chase something when it goes up. It was when Bitcoin exploded, you know, last November and October that everyone couldn't stop talking about it. And it's, if gold gets to 1400, everyone's going to be talking about it too. But really, you know, I prefer to allocate myself with good diversification, and I really see gold and silver as necessities in this market environment. I mean, look, gold is up, year to date. Gold, began the year at around 1280 and it's at 1350. It's up, just about $70, and it's one of the few things up this year. The Dow's down, the S&P's down, the NASDAQ's down, Treasury bonds are down. I believe, let me check that real quick. Yeah, TLT is down year to date. Gold is the only thing up. And when you're in a market with wild volatility, what goes up during that time is something to really grab onto as an answer, as a solution, as a safe haven. In August 2007, the stock market began to roll over. It didn't completely tip into a bear market until November that year, but in August 2007, gold exploded higher and began to outperform the stock market for a year. At that same moment, Treasury bonds also exploded higher. The U.S. dollar exploded higher. What's different this time is TLT, Treasury bonds are not exploding.
We'll have more with Mike Swanson right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, talking about cryptocurrencies, are they really in rough shape, and are a lot of them just going to fall to the wayside now?
Well, I think it's interesting. There's a website where you can see all of them. It's called Coin Market Cap. And as we're speaking, Bitcoin is down below 7,000. It's fallen over 50% year to date. That's not even counting the December top. Ethereum's collapsed. Ethereum's below 400. Ripple's a disaster. Litecoin's a disaster. There's still people though that are believe in them, and you can find them on Facebook and the internet. But what's interesting should be noted is there are over 1,500 cryptocurrencies besides these couple I mentioned, and almost all of them are just fading away and barely even trading anymore. There's some of them that only have so-called market caps of less than $1 million. So, for instance, today I'm looking at the rankings by market cap, and as I said, there's 1,500 of them, and I want to give you the exact number here, but no more than 100 of them have market caps worth over $90 million. And the thing about that is a lot of these market caps, and I'm not counting Bitcoin when I say this, but these so-called ICOs, these smaller ones, like I'm looking at one called, the name is Particle, another one's called Dropple. I mean, they got silly names to them. Engine Coin, Game Credits, Smart Cash, PayPal, Oyster, Fusion, on and on and on. I think a lot of these things are almost fake or fictional, because what they did is, by the way they created these high dollar market caps, is simply by opening up and marking the price of the coin up to a very high value, to a high level. And they'd say, well, there's like 1 million coins out there, and this coin's worth 100, so this is worth $100 million. And you can't really get away with that in the stock market within, when people IPO stocks, unless there's some real basis to it. But people are doing that in this coin world. And what's going on is these coins, besides, the top 50 of them or so, and really it's the top 10 that are the most important ones, but all these other coins are doing hardly any trading volume at all, in terms of money. So, for instance, there's a coin, I'm just looking at this, it's called Fusion. It's ranked number 142 in terms of market cap. It says it's got a $56 million market cap, but it's only traded $300,000 worth of coins today. And here's another one just right after it. It was a $52 million market cap, and it's trading $22,000 worth of coin. That's really nothing, and there's no way to know. It could just be the creator of the coin trading this back and forth to make the appearance of a market, to trick people into buying it when there's really nothing there at all. And this is really what the crypto world is. It's fiction, it's scams, it's virtual paper is what it really is. And that's not something I have any interest in putting a penny in. Now, you may say, the listener may say, well, I'm talking about the shady coins, and there's still Bitcoin out there and Litecoin and the top, 5 or 10 of them. Well, they're in bear markets, they're crashing, and a lot of the stuff that was being said back in December, that these are safe havens that will go up if the US dollar drops, the stock market drops, that's, of course, by events proven to be false, not true. And one thing I've noticed following people who talk about these coins is a lot of them are becoming traders now. They're saying, buy at 7,000, sell at 9, and do this and do that, instead of just trying to hold it for a big run. And good luck. My hope is such people will move into real markets, real exchanges that you can feel safe to have your money on. If I wanted to go try to trade one of these things, there's no guarantee the exchanges that you trade this stuff's on are going to exist the next day. But I don't have fears like that when I trade stocks, exchange traded funds, options, futures, or gold. So I just say, I wish Bitcoin people good luck. Don't believe the hype, but don't make it the only thing you get involved in. And good luck, but I don't believe in it.
Mike, thank you so much for chatting with us.
Thank you. Good to talk with you.
And for people who maybe have just joined us recently, can you tell us a little bit about Wall Street Window?
Oh, yeah. Thanks for asking it. WallStreetWindow.com. That's my website. And basically, I do a blog post of my own every day before the open. I also do one where I talk about the top headlines I'm watching in regards to the markets. Then I usually post guest posts from a couple financial people, and some of your interviews actually I post up there too. Usually about one a day. So I just try to put out some stuff I think is really good. And I also do have a pay service where I show people all the individual stock positions I own, what exactly I'm doing with specifics like that. But they can get the general market commentary just by going to the website.
Thanks again, Mike.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.